Peter Schiff partners' wild plan to save Social Security, borrow and invest like a crypto billionaire. Asterisk is Social Security on the brink of collapse? This might just be the solution everyone is talking about. Asterisk recently, James Hickman, a partner of well-known financial commentator Peter Schiff, has thrown a bold and unconventional suggestion into the ring to revive the struggling Social Security system. His proposal involves not just facing the crisis head-on but rather mimicking the audacious strategies of cryptocurrency billionaires by borrowing significant sums to invest in potentially lucrative assets. Peter Schiff has made a name for himself by offering provocative investment guidance, often emphasizing the importance of precious metals and alternative investment avenues. Hickman, who also writes under the pen name Simon Black, frequently challenges conventional wisdom, boasting a track record of forecasting significant issues in the U.S. economy, such as bank collapses, inflation, unrest, and the overwhelming debt levels plaguing the West. Banknote with $ moneybag ***, stay informed ***, don't overlook the market shifts. Subscribe to The Street's free daily newsletter for the latest updates. Moneybag banknote with $. Schiff and Hickman run a joint website called Schiff Sovereign, which proclaims the mission of promoting a wealth, freedom, power. The site aims to offer unconventional insights tailored for those keen on thinking independently about financial trends. It mentions, if you struggle to recognize the country you inhabit, if you're astonished by how rapidly the experts have altered our realities, and if you seek to understand the trajectory of these movements, we help you connect the dots. In a recent post, Hickman tackled a touchy subject, the sustainability of Social Security. He presented a rather audacious remedy that, while its specifics may raise eyebrows, nonetheless encourages broader dialogue about potential fixes. Here's the surprising approach proposed by Peter Schiff's partner to secure Social Security ***. Interestingly, Hickman proposed, somewhat humorously, that we look towards strategies employed by cryptocurrency magnates. The Social Security system is in dire straits. Projections indicate the trust fund may be depleted by 2034, necessitating a steep 19% cut in benefits. Hickman drew parallels to Michael Saylor, a cryptocurrency billionaire who successfully borrowed funds to invest in Bitcoin through corporate bonds. Saylor leads a firm, Strategy, formerly MicroStrategy, which he claims holds $69 billion in Bitcoin assets yet maintains a market valuation of $124 billion, evidence that investors are still enthusiastic about purchasing shares in his company. According to Hickman, the government should similarly engage in borrowing to launch a sovereign wealth fund, to be overseen by the nation's skilled investment professionals. This fund could channel investments into areas like real estate, commodities, equities, precious metals, and cryptocurrencies, essentially all the asset classes that have the potential for substantial growth. He observed how Saylor acquired risk assets through bond market borrowing, suggesting that governmental bodies could adopt a similar framework. If the government could achieve an average annual return of 9%, which Hickman believes is feasible for such a fund, it could manage to provide approximately 6% yields to its bondholders, substantially fortifying the Social Security Trust Fund. Investing in high-performing assets isn't as outlandish as it sounds. Nevertheless, Hickman harbors reservations about whether the U.S. government will take such daring steps, and rightly so. Congress has been scrutinized for assuming they have raided the Social Security Trust Fund, though this is somewhat misleading, as the trust fund is legally required to invest in special issue treasury bonds. Imagining lawmakers grouping together to gamble with the nation's retirement funds and volatile cryptocurrencies might not be the most public-friendly proposal. However, the special issue treasury bonds that fund Social Security are currently yielding disappointingly low returns. While Hickman claims the average return from the trust fund presents a meager 2%, the Social Security Administration noted that the recent 12-month interest rate for new issues in 2024 reached 4.271%. Nevertheless, due to past lower-rate bond investments, the overall return on trust fund assets this year was a meager 2.512%. As per conventional discussions, it's not entirely unreasonable to propose reallocating trust fund assets into investments with proven higher return potentials. In fact, this notion isn't new. A draft paper from the Congressional Budget Office dating back to 1997 illustrates the considerations surrounding this approach. Concerns about exposing millions of Americans' retirement savings to market risks have kept lawmakers from acting decisively in this area. However, as the deadline for trust fund depletion approaches, it's clear that a significant change is imperative. Asterisk asterisk what's the quick version of Hickman's proposal? Asterisk asterisk. Borrow capital through bonds. Invest in high-growth potential assets. Target annual returns of 9%. Provide bondholders with approximately 6% returns. Utilize the surplus to bolster the Social Security Fund. In conclusion, discussing a variety of ideas could be the key to moving past the current stalemate. It is essential for lawmakers to explore every avenue to reinforce one of the country's most relied upon social programs. How do you feel about Hickman's proposal? Could investing in high-growth assets truly be a viable strategy for securing the future of Social Security, or are there more traditional approaches that should be prioritized? Let's hear your thoughts in the comments.